Hello everyone, welcome back to Sam Trading Strategies. In today's video, I'm going to share a very simple but powerful pocket option strategy that focuses on momentum exhaustion, not trend chasing. Most traders wait for confirmation, enter late, and miss the best part of the move. This strategy is designed to catch the first sign that momentum is slowing down before the reversal becomes obvious. We will use only one indicator, the Awesome Oscillator, with default settings, and we will trade on a 15-second chart with a 1-minute expiry. If you like early entries and clean, rule-based setups, make sure you watch this video till the end. Before we continue, please remember this video is for educational purposes only. I am not giving financial advice and no strategy guarantees profit. Binary options involve risk, so always practice on a demo account and never trade money you cannot afford to lose. Now let me explain the logic in very simple terms. This is not a trend continuation strategy. We are not trading zero-line crosses and we are not chasing indicator color changes. The Awesome Oscillator does not tell direction, it tells momentum speed. Momentum always slows down before price reverses. When momentum is strong, the AO histogram bars keep growing. When momentum reaches its peak, the bars stop growing and start shrinking. That first shrink is the signal we trade. This is called the first twin setup. The first twin setup means that you see two consecutive Awesome Oscillator bars of the same color, where the second bar is clearly smaller than the first. At the same time, on the price chart, the two corresponding candles must also be the same color. This structure shows that momentum is still active, but it is clearly losing strength. Now let's see how this works for a sell trade. For a sell trade, the Awesome Oscillator must show two red bars in a row, and the second red bar must be smaller than the first. On the price chart, the two candles must also be bearish. After the second candle closes and the smaller red AO bar is confirmed, we enter a sell trade immediately, using a 1-minute expiry. This entry happens when selling momentum is still present, but it is starting to weaken, which gives us the early reversal edge. Now let's look at the buy trade. For a buy trade, the Awesome Oscillator must show two green bars in a row, and the second green bar must be smaller than the first. On the price chart, the two candles must also be bullish. After the second candle closes and the smaller green AO bar is confirmed, we enter a buy trade immediately, again using a 1-minute expiry. In both cases, candle confirmation is very important. This strategy works with Awesome Oscillator plus price action, not the indicator alone. If the market is flat, if the candles are extremely strong, or if AO bars are very small near the zero line, we simply stay out. This is an exhaustion strategy, not a random setup. To avoid overtrading, you should take a maximum of 2 trades per session and stop trading after one loss. The focus here is always on quality, not quantity. To make this strategy easier to follow, I've created a free step-by-step checklist PDF explaining all the rules clearly. You can download it from my Telegram channel, and the link is available below in the video description. Now that you understand the rules and logic clearly, let's move to the live chart and see how this strategy works in real market conditions. Before this entry, price had already made a clear upward move. We were not trading in a dead or sideways market. Momentum was present, which is very important for this strategy to work properly. Now focus on the Awesome Oscillator. You can clearly see two consecutive red AO bars forming below the zero line. The first red bar is strong and extended, showing active bearish momentum. The second red bar is still red, but it is noticeably smaller than the first one. At the same time, if you look at the price chart, you will notice that the two corresponding candles are also bearish. This alignment between the oscillator and price candles is critical. This structure tells us one very important thing. Selling pressure is still present, but the strength behind that pressure is starting to slow down. Momentum is losing speed, even though direction has not yet changed. As soon as the second candle closed and the smaller red AO bar was confirmed, the sell trade was executed immediately with a 1-minute expiry. Right after the sell is placed, price does not collapse instantly, and that is completely normal. This is something many beginners misunderstand. A good trade does not need instant movement. It needs correct timing. You will notice that the next candles become smaller and less aggressive. The strong bullish push that existed earlier is no longer visible. This confirms that the exhaustion signal we identified was real, not random. At the same time, the Awesome Oscillator continues to reflect weakening momentum. The histogram does not expand strongly in the opposite direction, which tells us that buyers are not stepping back in with force. Now look at the result. As the 1-minute expiry completes, price moves slightly lower and closes in our favor. The move itself is not huge, but it does not need to be. Binary trading is about timing, not distance. This trade wins because it was taken between momentum peak and momentum collapse, not after the reversal became obvious. Most traders enter late, after confirmation, and by then the move is already exhausted. Now, let's move forward and look at the next setup, so you can see how this same strategy behaves again in real market conditions. At this point, price had already moved strongly upward, which told us momentum was present. When I checked the Awesome Oscillator, 2 red bars appeared in a row, and the second red bar was clearly smaller than the first. The 2 corresponding candles were also bearish, showing that selling pressure existed but was starting to lose strength. As soon as the second candle closed and the smaller AO bar was confirmed, the sell trade was taken with a 1-minute expiry. After the entry, price did not drop aggressively, and that is exactly what we expect from an exhaustion setup. The candles became weaker and more controlled, showing that buyers were no longer pushing the market higher. The Awesome Oscillator also did not expand strongly again, which confirmed that momentum was fading, not reversing sharply. As the expiry ended, price moved slightly lower and closed in our favor. This trade worked because it was taken early, right when momentum started slowing down, not after the reversal became obvious. That timing is the real strength of the AOFT strategy. If you understand this setup, you will stop chasing trades and start waiting for quality. Subscribe to Sam Trading Strategies, because the next example will make this concept even clearer. Now let me explain this buy trade very clearly, because this part is very important for learning. At first, you can see that a buy trade was taken while the market was moving sideways. This was not a perfect trade setup. In a sideways market, price does not have clear direction, so buy trades like this should normally be avoided. I took this trade only as an example to show you what not to do. After that, I waited and observed the market carefully. Instead of forcing another trade, I allowed price to reveal its intention. When price finally broke out of the sideways range and created a clear higher high, the market structure changed. At that moment, momentum was no longer sideways. Buyers were showing strength, and the breakout candle confirmed that strength clearly. That is when the correct buy trade was taken. The entry was based on structure, not emotion. After the entry, price continued moving higher smoothly, and the Awesome Oscillator supported the move by showing increasing bullish momentum. After the buy is taken, price holds above the breakout level and does not fall back into the range. The candles stay controlled, showing that sellers are not pushing the market down. This tells us the breakout is valid and buyers are in control. As the expiry completed, all buy trades closed in profit. This is exactly how buy trades should be taken, not inside a sideways range, but after a clean breakout with confirmation. This example teaches one very important lesson. Sometimes the best decision is to wait, avoid weak setups, and enter only when the market shows clarity. If this explanation helped you understand when to avoid trades and when to take them correctly, make sure you subscribe to Sam Trading Strategies, because every video here is focused on building real trading discipline, not just showing wins. That's it for today. Stay patient, trade smart, and I'll see you in the next video.